people's main complaints about saving is that they don't make any money on it.
Yeah.
So then they don't save.
They don't save. Yeah.
When I first got into banking in 2006, the average savings rate for people in America was negative $500. That means the average person in America was in debt by at least $500.
Yeah.
So nobody was saving. Today, people are saving at a better clip, but still, it's so poor that nobody ever feels like they're in a good position, monetary wise.
Yeah.
So aside from the cash out aspect, the one that people love the most, do you understand that you could use your death benefit while you're alive?
Oh, really?
Yeah. So let's say you got sick, right? So let's use actual numbers, right? So on average, a black man in America is expected to live till 85 years old, right? You're probably 4 times more likely to get a chronic disease than you are to die.
Yeah, that's true.
Okay. So on average, a chronic disease, ALS, heart attack, cancer, renal failure, right? A stroke.
Oh, a stroke.
4 times more likely to have one of those things happen. On average, those situations are going to last you on average 7 years. And by insurance costs, health insurance costs and medical costs, on average is going to cost you out of pocket $50,000.
$50K.
How many people have $350,000 lying around to pay for their care?
Not many.
Okay. If you had a life insurance contract, and not every company does this. This is why, again, working with somebody who knows things, right? Companies will give you the ability to access your death benefit to pay for your care if you got one of these situations. So when I say average 7 years, some people, it may last them 15 years.
Right.
Some people may last them 1 year.
Right.
But you still need to have 50,000 on minimum to infinite amount of money, right? So they'll tell you, all right, if you get one of these things, they go with your doctor, you can access this option or this rider inside of the contract that you can draw that money that you need for your care from the death benefit. Now people will go, oh, well, what does that mean for if I pass away? Well, if you drew that money, then your family gets $50,000 less if we're using round number. Oh, but is that better for my family? I'll ask you, what's better for your family? That you use the $50,000 from the death benefit that you were going to leave them, or that you died? Right?
Yeah.
Like pay for your care to still be here.
Yeah.
And then like buy more insurance later.
Right.
Don't like one major impact I see with people, especially people of color and people from the Caribbean. They live the worst life so they can leave their family whatever minuscule dollars that they had, which is retarded to me. Right. Like you have to live your life. You have to make sure, because the longer you live your life, the longer you're going to be around.
The more opportunity you have.
The more opportunity you have to correct certain things, or even purchase more insurance, or save more money.
Save more money.
If you run yourself into the ground, but you got $350,000 lying in the bank, and I saw this from older people. They had like $300,000, $400,000, $500,000 sitting in the bank, and they're living in a hovel, or they're not going to get the care, or they get a situation like cancer or whatever, and they don't want to go to the hospital. They don't want to pay for the chemotherapy, stuff like that, because they're saying to themselves like, oh, if I use that money, then what am I going to leave my family?
Yeah.
Your family rather have you than the dollars.
Right, true.
So if you have a situation where you retired and you had a pension that pays you $50,000 a year, but you also had a 401k that you had, over $500,000 in, but you also saved over time. And this is like probably like best case scenario, but you also had money saved over time. You have $250 saving in the bank.
Right.
Why would you want to touch any of that money? Your 401k money, number one, you're going to have to pay tax on that money.
Yeah.
And nobody wants to do that.
Yeah.
That's why most 401k money stays in a 401k. And nobody ever touches it.
Yeah.
You don't want to take the money out the bank because the bank's going to tell you you're no longer a private client. That's important to people for some reason, even though they don't do nothing for you. And I can tell you from experience, because I'm a private client at Chase, they do nothing for me.
Right.
Like the customer service has become so terrible that I'm confused on why I even have my money there.
Yeah.
Right?
You ever consider mobile banking? But go ahead.
Yeah, but so for stuff that I need to do, I unfortunately still need to have a physical bank.
Well, go ahead.
But if you could leave that money alone, not worry about taxes, penalties, all this other stuff, and you had a death benefit, well, the death benefit is a number that, you can leave your family, but think about all the other assets you accumulate over time. When people go, how much money do I need to have in life insurance? I go, what's your assets? Because I don't need you to pay for $500,000, $1 million life insurance.
Right.
You got a house that's paid off. You got savings. You got a 401k. You have retirement. You have a pension that your spouse can get. That's money. That's a death benefit.
Right.
So why not use the life insurance aspect to cover you for everything else? Build up your money that you can use in case you need to go borrow money. Nobody wants to borrow money. Why? It becomes a hassle. What's your credit score? Let me see your taxes. Let me see statements.
Right.
Oh, where'd you get this deposit from? Like, why are you asking these questions? Like, I need to borrow money. Like, what's the problem? Right? So build your own bank there. And then if you get sick, which is more likely than you passing away,
correct,
why not use that money to pay for your care and then still have all the other assets to leave your family? And that's the financial literacy that I push forward, to understand what life insurance is, but also doing these other things where you can have assets to leave your family. Because the average life insurance agent who's just trying to make a commission off of you will tell you, oh, you're this old and you have this much as a salary. Oh, then you need $1.5 million in life insurance. But then the cost is so astronomical that you go, I can't do it, right? And plus, you're not creating any cash value with it because most of those policies, you don't even start creating cash value until 5 years later into the policy. And then they'll tell you, oh, okay, cool. So you can't afford it in a whole life. Then you buy it for you in a term.
Yeah.
Oh, but I'm 25. Let me buy your 30-year term. Okay, I'm not trying to die before 55. So now 55 rolls around,
right,
and the insurance company's going to tell you, oh, we can keep this policy going on a year-by-year basis. So you were paying $50, but now this next year you're going to be paying $100 a month. On the year after that, $200. The year after that, $400. Year after that, $800.
That's how they make the money.
Then you go, oh, I can't afford this no more. So now you don't have insurance. So now when you die, you have nothing. You haven't created any cash value. You haven't left your family anything. And you really haven't done what you're supposed to do if you buy term. You're supposed to invest the difference. So if they told you your whole life is going to cost you $300 a month, but I'm going to give you this term that's $50 a month, you should be investing the other $250 every single month, because you can build money enough that you can supplant the life insurance by the time 30 years from now. If I told you to invest $250 a month every month for 30 years, you would have well over probably $500,000.
Yeah, I'd rather take that route.
So you rather take that route. So you have to understand what it is. You have to understand who's selling you it, why they're selling it to you, but what's the benefits and how I need to use it for me.
Yeah. No, that's important information. I'm glad you're sharing this with us.
Yeah.
Yeah. Because now, and I said this before, last time we touched on this, is that a lot of this information